You're all very wrong about the doom and gloom that you've been selling here on YouTube, and I wanted to talk about why. So, the thesis that I see making the rounds goes like this: the US government debt levels are now incredibly high, right? And so, your thesis is since the government will not stop spending, and because it's politically untenable to enact austerity or for that matter, to default on the debt, that the government's going to keep spending money to meet its obligations and pay the bondholders on the other side of that risk, and that will keep destroying the value of the dollar over time, leading to an inflationary scenario. But all that doesn't hold any water at all as a thesis, and there's a reason why it doesn't hold water at the end of the day. Because there's this little variable that you've all forgotten about, or some people have become skeptical of it because it's convenient for them to try to rescue themselves by denying that it's a reality, but it is objectively a reality, and you can deny it all you want, but it is still a fucking variable that is going to destroy your thesis. Because you say that it's useless or whatever, it doesn't matter. This will destroy your thesis. The velocity of money. Everything that I know about the bondholders who are on the other side of that government debt as a group of people is that they are investors who bought bonds through a broker, and invested in the U.S. government itself, who was obligated to pay them back on the other side of those bonds, right? Well, in order for your thesis about hyperinflation to hold water, what would have to happen is that the bondholders would have to take those bond payments and then go on a shopping spree with the bond payments. And yet everything that we happen to know about investors and rich people is that when they get a check like that, do they go on a shopping spree? No, they do not. Instead, what they do is they take the money and they either decide, okay, well, I've won this cycle and this round of things. Should I buy more assets or more bonds? So what they will do, which is also a form of assets, they'll decide basically. I'm kind of moving into this situation myself as it stands, so I know. I mean, if I got a huge influx of cash at this point, the only thing that I've got left that I really need is a car, and so once I've got that baseline dealt with, I'm good for quite a while, and everything else would be poured towards some kind of investment of some kind to grow, the empire that I'm slowly building and everything. I'm not going to go out and go on a shopping spree, for quite some time. I mean, this laptop that I've got, it's good for another 5 years. I might need more storage space in the form of hard drives periodically as mine fill up, but that's it. I'm good. And so what really drives me crazy is that there's this thesis that's out there, right? And it says, essentially that hyperinflation is coming, and it's popular, and it's a popular idea to think, but it just flies in the face of reality. Your thesis is bad, and it's wrong, and it's errant in its analysis because it doesn't even begin to think about the velocity of money aspects of the equation. You're not even considering the way that bondholders act as people and what they're going to do with those payments once they receive them from the federal government. You're acting like they're going to go out to Main Street and then go on a shopping spree at the local grocery market and everywhere else. Go out and buy a big flat screen TV and all these electronic gadgets that are proliferating these days, get themselves a nice laptop and inflate everything, to the point of absurdity. But that's not what's coming. When the bondholders get that money, they're probably going to spend it into the stock market at that point, or they're going to spend it on more bonds, and double down on the debt that they've just made. And even though systematic risk is rising, their behavior isn't going to change into going on to spending that money into the economy. That's not going to happen. I mean, when you give rich people more money, they don't tend to spend it into the economy. They tend to buy more assets, which is why if you really want to stimulate the economy, you don't give money to rich people. In reality, you give it to the poor, because the poor have to spend a greater proportion of the money that they take in, into the economy, which is why when you start seeing the government give money to poor people, you can expect some, at least temporary, inflation that will come in. But everything I know and have lived through for the last 12 years suggests that the analysis that says buy gold, buy silver, buy Bitcoin is completely errant, because when the financial crisis hit in 2007, the first thing that happened, was that housing prices began to collapse. Now, they did go back up, but that was only because the government intervened and bailed the banks, out. It let a few of them fail, but it ultimately bailed most of the majority of the banks out of the crisis that they were, in and as the counterparty in that situation. And housing prices did collapse to pennies on the dollar, basically, for a while, until the federal government decided to intervene and everything, and to remove that from the equation. But debt levels are now so goddamn high, and the Fed has so much on its balance sheet at this point that if another crisis like that happens, the Fed is not likely to actually bail the economy out, because to do so would be to destroy the value of the dollar, what faith is left in the U.S. currency. But I will say one thing: the history that we've lived through has been one in which, the buy gold, buy silver, buy Bitcoin idea spread like wildfire. And a lot of people did it, and I can't blame them. I mean, look at gold prices and silver prices and everything. They're sky high right now. But, that's kind of the idea. It's not the contrarian investing idea. You're buying into something that's going up at this point, and everything. And you're probably going to end up buying high and selling low at the end of all of this. So I wouldn't necessarily invest, just say to invest in the direction, to buy into things. I bought Intel stock when it was weak, because there was blood and panic in the streets. Our family did. We bought into it because it was low. So when it turned out to be our best investment last year and everything. But I just wanted to say that this thesis is very errant, because it just completely fundamentally ignores the fundamental reality of the velocity of money. The bondholders aren't going to go on a shopping spree when, as a consequence of the government making those bond payments to them. That's just not going to happen. And in the meantime, the government spending, that's going on is going to be more and more of it is going to have to be spent, paying down the debt that it now owes the bondholders and everything, which means that there's less money available for discretionary purposes, which means that the velocity of money as a result of the government printing more money will actually be that the velocity of money goes down instead of up. Now it's just on somebody's balance sheet in their portfolio and not being spent into the economy. And that's what's going to happen, is that the velocity of money is going to collapse. The aggregate demand for goods and services will collapse. And then this will happen despite the fact that the government is addicted to spending and goes on spending like a drunken buffoon. You're not going to see inflation as a consequence of it, because it's just going to be money that's on somebody's balance sheet that isn't spending it into the economy. Now, it will create whales that can, occasionally trigger bounds of inflation if they choose to, but, those people are probably not going to do so very frequently or very deeply. I mean, I've seen the plutocrats, man. I've seen Nick Hanover make his point. There's only so many goods and services that he can consume as a rich people. He can't displace an entire economy of subprime borrowers that could be middle class people instead. You need a broad middle class, because that's good for the rich and the poor, because those people go out and spend their money and everything, and a virtuous cycle starts to open up. But that's not, I do realize what you're saying, but, I lived through this period. I lived through what happened when the housing market collapsed. I lived through, and I saw it, and I didn't forget that housing prices went down before they went up because of the government intervention. they collapsed, and the Fed was terrified about deflation and everything. And so I've seen this play out. I've seen the fact that the Fed expanded their monetary sheet by massive amounts. And then, what happened at the end of all of this was everybody went, oh, okay, well, I've been vindicated because inflation is finally here 12 years later and everything. And it's like, no, you're not vindicated, because we can explain the high inflation by the fact that the whole economy seized up and shut down on account of COVID-19, Supply chain disruptions, the supply chains were cut off and cut loose at that point, and there just wasn't enough. They weren't able to produce enough for the forces of aggregate demand that were out there to be met. All that pent up demand started to come back, and the suppliers just weren't ready for it. And so inflation was the natural consequence of it. But your whole thesis, the whole rhetorical thesis, forgets the fact that this money is not going to be spent on Main Street. Now, I do think that there is a possibility that you may be right in one way, which is that money is probably going to be spent on Wall Street buying stocks, which will drive the price of stocks up. But nobody's going to complain about that.